Hello dear traders, you are watching weekly stock market review on InstаФорекс TV channel with me, Tahmina Salomova. The first week of 2016 was marked as one of the worst periods for the US stock market. The Chinese market, which in fact caused the collapse of the American market, also suffered big losses last week. All of this, along with record lows in oil prices, left investors in panic. In China, trading floors were shut Friday after stock indexes sank by 7%. The depreciation of the yuan against the US dollar by the People's Bank of China has aggravated the situation, and main investors question the stability of the Chinese economy. Experts say that further weakening of the yuan is in the interest of the government. It will help local producers to compete with rivals across the region. The Nasdaq Composite ended the day down 1% at the level of 4,643.63 and was down 7.3% of the week. This is the longest losing streak for the index since November 2011. The Dow Jones Index stumbled by 911 points in a few days. That is the steepest decline in the history of the benchmark indicator. On Friday, the Dow dropped by 1% to the mark of 16,346.45, booking a weekly loss of 6.2%. The S&P 500 plummeted by 1.1% to the level of 1,922.02, with all 10 of its main sectors finish in negative territory. The index recorded a 6% weekly loss. The role of the decline in world oil prices for the stock market can be hardly overestimated. One reason behind the fall in oil prices is the condition of China's economy, as it is one of the largest consumers of crude oil. So with the Chinese economy slowed down, that means reduced consumption for oil. Since the beginning of this year, crude prices have fallen by 12.8%. Continuously falling oil prices had led several US producers to the verge of bankruptcy. These companies actively borrowed funds and have huge loans, so the banking sector is also at risk. According to analysts, the bankruptcy of oil and gas companies may strongly push the leading indices downwards. The bright US jobs report helped US shares move higher only in early trade, but the indexes turned lower as oil prices tumbled to new lows. The US economy created 292,000 new jobs in December, handily beating the consensus forecast of 200,000 new jobs. The unemployment rate remained at 5%, matching expectations. Gap shares led the worst performance among the S&P 500 companies. The shares dropped by 14.32% to the level of $22.91 a share after the company disclosed a drop in December sales. For the 5-week period ended January 2nd, Gap reported same-store sales reduction across all of its brands. The 5% decline was steeper than the 3.9% drop analysts had forecast. At the same time, the aluminum giant Alcoa lost 2.5% after it announced plans to shut smelter operations in Indiana and curtail refining capacity in Texas. Meanwhile, shares of Apple supplier Cirrus Logic rose by 3.7%, despite the fact that chip company late Thursday cut revenue guidance for its December quarter. The company cited softer than expected demand for certain portable outdoor products. Earlier last week, Apple suppliers were rocked by news of cuts on iPhone 6s production. You have watched the weekly stock market review prepared for you by InstаФорекс TV company. See you later.